Welcome to Sharing Mindsets, the go-to podcast for everything real estate in your region. Join Daryl King of the top-ranking Daryl King team as we explore market insights, trends, and strategies. Whether you're buying, selling, or just curious, this is your key to unlocking the property market. Let's dive in with Sharing Mindsets with Daryl King. Your real estate journey starts now.
It is Daryl King, and it is October 31st, so someone tells me it's Halloween. I got Pluto sitting here on my lap, and Pluto is just adorable. Anyway, Pluto is a dog star. He's on many commercials. He's Rima's dog, one of the girls that works for us. So this dog, what commercials is he on? What commercials she's been on? Canadian Tire right now. So she's Miss Canadian Tire. So this is Daryl King, shared in the mindset, and our special guest today is none other than Sogol Monfared. And, you know, it's unfortunate that she couldn't make it in today. She was supposed to be here live with me. But I'm going to have Pluto hanging out with me for a little bit. But, you know, Sogol is absolutely amazing. Sogol is the office manager at Remax Hallmark. And she has multiple hats. You know, she's a broker manager, student operations coordinator, visionary project manager. Her prowess extends beyond just real estate, as she's made commendable strides in management, marketing, brand, and most crucially in fostering world-class client relationships. What truly sets Sogol apart is her profound knowledge in human psychology stemming from her undying passion for research and keen interest in enhancing communication and understanding. As she delves into the world of pre-construction today, we are certain her insights will reshape our perspectives. Please join us and welcome Sogol Monfared. Let's give her a big hand, guys.
My goodness, that was some introduction. I don't know if I can live up to that.
There goes Pluto. See you, Pluto. Hasta la vista, baby. How are you, Sogol?
Very good. Happy to be here with you. I was looking forward to seeing you in person as well. I'm sorry that couldn't happen, but I'm happy we could join online at least.
Well, it was either that or cancel, and, you know, being Halloween, I figured I could have did a one-man comedy show up here.
Successfully, absolutely.
But I'm here. So tell me, you know, how does a beautiful young lady like you, that's the manager, get so involved in pre-construction? I know this question wasn't something that was on there, but, you know, you are basically, for the broker of Remax Hallmark, you're the leader for all the pre-construction pretty much that we do. How did you get involved to be to that position?
It was just a passion that started brewing about maybe 15 years ago. And, you know, when you're good at something, it doesn't feel like work, and you keep doing it. And the more you practice, the better you become at it, right? So 15 years of practice in, you know, being adaptable, becoming financially, financial literacy is very important in pre-construction for investment because, you know, there are a lot of financial principles, including budgeting, risk assessment, financing, all of that involved. So just practicing and getting into it more and more has brought me to where I am today, which is just phenomenal, you know, having such amazing colleagues like yourself and our 2,000 strong agents army and your amazing team of over 80 realtors full time. It's incredible just to be alongside you guys and be able to build relationships, you know, with all of these incredible developers in our beautiful province, and cater to our buyers and sellers, making sure that they're protected. So overall, you know, the passion of this industry has been a strong force, and practice. I think, you know what they say, practice makes perfect, right?
Well, good practice makes perfect, because if bad practice, you can never be perfect. And this is, I think, the biggest fault for anybody I know in any type of business, that if you properly train, whether it be weightlifting, whether you be a golfer, a hockey player, a salesperson of any type, if you incorrectly train and listen to the wrong people, you're never going to get it right. You're going to always be a broken stick or a broken ball or whatever it is. So, you know, 15 years, you had a passion. Now, in Toronto, where was pre-construction in 15 years? It was not to what it is today. Today, it's one of the biggest things going. If you go downtown, you got probably as many towers here as you do anywhere in the world. I think there's 230 towers in Toronto right now as we speak. So, the market in pre-construction, at least in the condo world, is down substantially right now. But we all know real estate is cyclical. So you're going to have your highs and lows. So people have to understand that it just cannot always be on the rise, because what happens is we just price everybody out of it. But, so let me just ask you a few questions that maybe some people can understand a little more. So as a consumer, if I'm looking at pre-construction investments more generally, whether in Canada or elsewhere, the considerations will be slightly broader. So I have a list of 10 to 15 questions I want to ask, and we'll see what we can get into. So one, why pre-constructions? What are the advantages of investing in pre-construction as opposed to existing properties? And what are the potential risks and rewards?
That's a great question. So why pre-construction? It's not for everyone, Daryl, as I think you would agree, right? You have to have a certain level, a minimum level of risk tolerance, right? Because it involves financial risks, and you need to be comfortable with taking calculated risks. When I say calculated, meaning that unless you are fully informed and trained and know about it, you need a professional who is an expert in the field to guide you as a consumer. And you have to have an understanding that you're not going to achieve immediate results, right? So those are two factors that are involved in every single pre-construction purchase. Now, adaptability, right? So our market is highly dynamic, and it's subject to various economic, social, regulatory factors, right? And we have to, as consumers, if we're on the other side, we've got to be able to pivot, right? So the advice that I provide our agents with today is that, when you are speaking with your customer or client, first, let's understand what the needs and wants of the client is, right? So first, you got to see if pre-construction is even right for them. Giving an example, so a consumer who's looking to invest maybe under 250, 300,000. In our amazing market in Toronto, there isn't much else that you can do with that, right? So for someone,
when you say, so let me be clear on this. So when you say they want to invest 200, 250, that's their deposit money and their earnest money. The rest would be on a mortgage.
Correct. So
because
let's say
never
that
buy a condo here for 200, 250.
Absolutely. Yes, that is correct. So that would be a deposit, right? A deposit, and it's going to be paid in installments, but it's for the consumer who already either has a mortgage, doesn't want a second mortgage, or for whatever reason is not going to be qualified for a mortgage today. And they would like to have time to plan this out. And they have to have a deposit of, let's say, minimum 100,000, maximum, I would say 250, 300. And let's say that they do not need to take over this property immediately. They don't need it, so that you are buying in the future, right? And also to understand supply and demand and what each area has to offer. We have many amazing submarkets in Toronto. They're not all the same. So depending on your risk tolerance, depending on your budget, the deposit amount that you have, you may not exactly be able to pick and choose which submarket you want to go into. Your budget is going to dictate that mostly. And you and I know currently that our, let's say, downtown core, central core in Toronto, prices are anywhere from maybe $1,400 per square foot and up, goes maybe as high as $2,500 when you get closer to Yorkville. And depending on, again, the budget and the deposit that the client has, they can end up in different submarkets. Now, advantages, disadvantages. Advantages, I would say that you're investing in real estate, which is long-term, and long-term in Toronto, it has proven to be a safer method of having your money work for you instead of you working for your money. And you have quite a few years, anywhere between, let's say, year and a half, 2 years, to maybe as long as 6 or 7 years, to plan and make sure that you're prepared for your upcoming closing, right? So that would be getting ready for getting a mortgage, if you need to build up your credit, if you need to save up more money, whatever it may be, liquidify assets, and so on. And if you need to, let's say you have a home already that you're downsizing, upsizing, and you need to dispose and sell that property, it's easier to manage and plan your transition, which I think you may agree, because in resale, let's say if we need to sell our house to buy another home, as realtors, and I see quite a few here that I know on this Zoom call, that it's difficult to align the two dates, right? And sometimes it becomes challenging. I'm sure you would have many stories based on the many number of years that you're in. Yeah.
One thing that you mentioned is about, listen, and I tell everybody this: real estate is not a short-term gimmick. And it's like, there's lots of things that you can buy in, like stocks, in and out, and it's okay. Real estate is a long-term investment. It's not only investment, it's your home. So that's the beautiful part. You have to live somewhere. You either rent and pay someone a mortgage, or you own your own house and you pay your own mortgage, and then you're going to have equity built up over the years. But, let's say you just bought last year or the year before in the peak. Well, right now, you may not get as much money as what you paid for it. But if you hold it for 5 or 10 years, I will guarantee you will have a substantial profit at the end of that term, versus someone that rented for 5 or 10 years where they could be out. I did this for one of our clients, and I think it was basically almost about $400,000 paying out, versus potentially $400,000. So the net swing would have been $800,000. So right now he's renting. He sold his house. He thought he could only qualify for $900,000. We got him pre-qualified for $1.2. So right now he's just throwing his money away, aimlessly. So, pre-construction, some people may have a big house and they've got kids, so maybe they want to buy something for kids. Or maybe they think, I'm going to downsize and I'll go live in that condo or townhouse or even smaller house, whatever it may be in the future. So it's not always, listen, pretty much what is from end user to investors, what is it, about 70% for investors right now?
Yes, until recently when the market started to shift. We had a large number, like a great percentage. I wouldn't say exactly 70%, but probably close to that. It was multi-owners trying to invest further money without getting a mortgage immediately. Yeah.
Well, yeah. So this is where now some of them are in a bit of trouble because they didn't plan for a downturn in the market. Interest rates at an all-time high from 22 years. And now they've got their closing. So, I see many, many assignments out there. So this is what you have talked about, having a secondary plan that where something like this happens, that you can close it and just rent it out or whatever it may be. So,
absolutely. And also, this is why it's highly, highly important for consumers to work with those who are experts in this field. If you went to any of the experts during 2022, if as a consumer I would come and say, Daryl, can you please buy a unit for me in whatever project? And there were so many hot projects. But consumers, unfortunately, don't necessarily understand that there is hundreds of thousands of dollars going into marketing so that they may make it so attractive. And just because they're great at marketing it, it doesn't mean that it's a great project to invest in. So you've got to know your numbers as a realtor who's in this field and an expert. You've got to know the supply and demand in that submarket. You've got to know what has happened in the past, let's say 5 to 10 years, and what the projection is within the next 5-10. Because as you said, Daryl, beautifully, real estate is a long-term game. So if you don't know what has happened, and you and I both know history is one of the safer ways to be able to predict the future, especially when it comes to growth of, specific submarkets. So if they bought last year, and I would say in over maybe 30-40% of the projects that opened last year, very highly that they're going to be in major deficit now, unfortunately. So even collecting rents, it's not going to rescue them because of the interest rates. And this is when they have just walked into a presentation center without having representation or any advice from an expert, or they've chosen to work with an agent who is mainly either resale or commercial and doesn't know pre-construction very well.
So why pre-construction? What are the advantages of investing in pre-construction as opposed to existing properties? We know the potential risk and rewards. Like, if you hold something 5 or 10 years, your investment's probably going to double in that time or close to it. So
definitely. So each of our submarkets, if you go back maybe 20, 30 years, they have something called the doubling factor. It's an average number of years that you can double your investment. Now, for our downtown Toronto, the doubling factor seems to be an average about 5 years. For North York, seems to be about 7 to 10 years, depending on the style of the property. So potentially, you're getting all that profit by choosing well and saving a little bit of deposit. That's it. And it's one of the safest and most rewarding ways of getting your wealth double or quadruple. I'll give you an example. So there's a great project by Madison. It came to the market, I think it was closer to 2000, end of 2017, 2018. And at that time, it's in downtown Toronto. At that time, they were selling, let's say, a condo for 1,000 square feet, about $1,050,000, right? So just over $1,000 per square foot. For that time, it was considered very expensive, but for those experts who knew the potential of the area, they came and bought it for their clients and themselves, and it was sold out under 7 days. Now, let's do some numbers to make sense of how much money there is to be made by our buyers and sellers, consumers, and ourselves as investors, right? So on $1 million unit, you have to put a gradual deposit of 20%, which includes which is equal to about $200,000, right? So you paid $50,000.
That 200 is due in generally broken parts, right? Especially right now, the builders are being much more flexible. That with the deposit money, it's unbelievable. Like some of the things happening now. If I was going to buy a condo, this would be a great time to do it.
This is the perfect time, Daryl. Now,
Q Tower, Emblem, ESQ2. In North York. There are so many great projects right now, and the deposit structure they have structured now is so much easier than when everything was at a peak. So if you have that 200, it may not be due for almost 2 years.
Currently, Daryl, there are projects that investors can get into for as little as $25,000 a year. So we have projects right now that are very close to the most prominent universities in Canada, in the mid 500s, and the developer is asking for 5% a year, which is equivalent to under $30,000, 12 months apart, each payment, only 3 payments, and nothing until 2027. So for those buyers, consumers who haven't been able to get in the market because, stress tests or because prices were just so high that it was impossible to get into any of these projects, even though the deposit was broken down. Right now, because of the soft deposit structure, it's the best time for them to get in the market.
Yeah, I don't think, and that's the thing right now. Like, I've gone to some of the grand openings of some of these builders just recently, and I just see the advantages for realtors, for investors, because they're offering something for everybody. It's advantageous for the realtor, it's advantageous for the investor or of an end user buyer, that they've offered lots of perks. And, so if you are looking for that investment or eventually thinking about moving into it, like I bought one myself, and, I'm thinking, well, one day, I'm in a big house now, but one day I may downsize and I have a nice condo that I can move into, right? So,
Definitely, yeah. And also, it allows consumers to build portfolios, right? So instead of usually during the workshops that we have, you and I both, we advise our realtors to, when speaking with the consumer, when speaking with clients, make sure that you counsel them when purchasing pre-construction to close it and keep it. They have to make plans and make sure that the budgeting affordability is there and they feel comfortable with that. So given any kind of market situation, that they can keep it for long term. And we're talking about minimum 2 years after it's built and closed, because also there are lots of taxes that are applicable, on
HST.
Capital gain and all sorts. So again, it takes an expert to be able to navigate through these transactions. And it's great that you've been in the industry forever and you are one of the platinum partners with all of these developers, and that, with your guidance, your agents are protected, because if they're not sure which project to go to or what to buy in a specific project, or if they need special access, if, right now, you and I both know we can negotiate higher commissions, right, for our agents. Yeah. So lots of perks in being with a very strong team, such as yours, because it protects, again, agent and consumer both.
We're going up to one of the builders on Thursday. I think there's about 35 of us. They're going to have a lunch and give us a presentation. So, it's one of the girls that used to work for us, and I had called her up to see how she was doing, and then they invited us up for a private viewing just with the team. So I'm really excited. I know the guys and girls are very excited to be going there. And I know this, to me, is more of an end user, because it's overlooking the water, Lake Simcoe. It's up in Aurelia. So this one is more, and, Q just opened up downtown. I mean, location, like I'm a sports fanatic. So, maybe I'd want to grab a place there to spend on the weekends. You know what I mean? There's so many great condos, and everyone has so many great amenities that they have to offer. So even for end users now, I find, like, I look at some of these places, I go, oh, I could live here, right? So as an investor to rent it out, I mean, what tenant doesn't want to live in a cool place? So, location, I learned over 34 years ago, location. So, I would still say today that everybody has different needs and wants. So it depends on what your needs and wants are, and having someone that can give you guidance. But I'm going to say location. Right? You have your up north condos, you have your midtown, you have your downtown, you have your east and west. They're popping up everywhere. So there's something for everybody in a different flavor. Like, I got a red jacket.
Yeah, the options are endless, truly. But as you said, for consumers who are end users getting into the condo game, the numbers are getting up there, Daryl. It's quite interesting, especially in today's market. We see a lot of end users rather than investors entering the pre-construction purchasing game. And, given how our millennials, Gen Z, their level of motivation in life generally, it's very different. So most of these guys depending on, I mean, from what we're seeing, the projection of their income and so on, it's going to be very difficult for them to afford buying houses and land. And it's very likely most of these guys are going to end up in condos just because of affordability. Right. And as you know, in so many great pockets of our city, we're also running out of land. Right. So there's no other way to get into it. Such areas, and you and I were talking about this a while back, such areas, let's say, as Yonge and St. Clair, right? Or a little further south. So many great schools. And if a family wants their child to go to that school and they don't have, let's say, $5 million to spend on a piece of land that doesn't have much structure on it anyways, they're going to end up in condos.
Well, there's $4 billion worth of condos going up in that area. Right?
Yeah.
And, you know, that whole, it's like Yonge and St. Clair area is very old. It's been around for 40, 50, 60, 100 years. So now there's a whole large condo developments going in by many different builders. It's going to be like a little city within the city. And that's what we're seeing more of everywhere we go, where plazas were or whatever. They're tearing them down, and you're going to have 4, 5, 6, 7, maybe 10 complexes, right? Look at even Hamilton. You know, their emblem is building 1,000 units out there, right? So, and there's many other builders building out there also. So areas.
Hamilton, definitely.
Not just Toronto and just short GTA. Now it's expanded even more dramatically. So, you know, if you got family in Hamilton, go to Hamilton. You know, I'm going to get a property in London. It's going to have 261 units. So we're not going to sell the units. We're looking for a builder to build the 261 units. So we just got that. So if you know any builders, let them know we're going to have 261 units approved and ready to start development. By the time they build it, the market has shifted and to be quite profitable. Even I was downtown, I went to eat at the Eataly at Bloor. I never ate there on Saturday night. And there's one Bloor, 40 stories, supposed to be 85 stories, and it's supposed to be finished 2 years ago, but there's still another 40, 45. So you could get caught sometimes, and you're going to have to wait, right? So what happens?
Exactly.
What happens?
I mean, at locations like that, you get a lot of investors as well, and they don't mind it as much usually because the money is there, and it's, you know, you have the profit margins building up, and especially right now with interest rates, I think they're happier not to take over. With that one particular project, unfortunately, it's one of the only that has gone into receivership.
Yes.
But it's been bought out already by KingSett, so we have to see how it's going to unfold. Since we're on that topic, you and I both also know how important it is choosing developments well, right builder, right portfolio, and also that they have a reputable and strong law firm behind them, so that the deposits are, you know, less at risk.
So here's the question. Talking about deposits, how much is insured? 100,000?
That is a great question. By Tarion, I think the total is 20,000, but depending on if it's a high rise or a low rise, it can be different.
No, but you're insured up to 100,000, I think, as the individual. So once you start going over that, your money may not be insured. So
exactly, yeah. But if it's with, you know, a reputable lawyer, it goes into a trust account, and we know that they're not going to touch that trust account, right? It has happened in the past that smaller law firms, unfortunately, that just hasn't been the case, and they've taken the money and the clients were just completely out of money and lost all of their deposit. So with one Bloor, luckily, it's a very strong and reputable lawyer. Deposit, the trust account is there. So worst case scenario is that the project will be canceled and deposits will be refunded to the clients.
Yeah. See, that's the last thing as realtors that, you know, that they get into a project that goes under but it's like anything in life. There's no guarantee in anything. So whether you're buying an in-use house or pre-construction as an investment, there is risk, and you just got to be able to make sure that you can have a backup plan for these situations. So,
Daryl, with great risk comes great reward as well, right? So imagine that if you are investing $200,000 in small portions and buying a condo for $1 million, that's not going to be ready for the next 5 years. On average, it has proven that you're going to get roughly about more or less 140% on your deposit. So your $200,000 is going to turn out to be over $300,000 without you doing anything. And without you having to pay property tax, mortgage, deal with a tenant, maintenance fee, and all of that. So having an entrepreneurial mindset in our field, as well as for consumers, is embracing a certain level of risk, but again, seizing opportunities. Right? And then you've got to be cautious about the ever-evolving market and know how to navigate it and be prepared for it. And that's why, again, it's very important to have the right consultant, have the right realtor. If the realtor is not an expert, then reach out to the team leader or reach out to someone who knows it very well so that you can choose well and also hold hands with the client throughout the entire journey of 2 to 7 years to make sure that they are prepared as the market changes, that they have to start preparing.
Well, you look when Noble hit $1,000 a square foot. That was the first one in Toronto to hit the $1,000 a square foot. What's Noble now? $1,750, $1,800 a square foot?
So it's roughly about 1,700. So imagine, again, going to numbers, so we make sense of how much money it can make for you. For $1 million condo, you put down 200,000. Your 200,000 has made you over $600,000.
Yeah, that's exactly. That's why, guys, you have to picture it long term. You can't just think 1 year, 2 years. It doesn't work that way. It never will, because listen. As the market changes, you think everybody knew? Listen, I predicted last year when I speak in November 30th, and even that full-page newspaper ad, I said the market's going to change, interest rates are going to change. I pulled up the newspaper ad in our last meeting, and I brought it out. So, you have to be able to read into it. I think it was going to be as high as this and go up that many times. No, I didn't figure that much, so it's even higher than I anticipated. But you know what? You wait things out. So right now, if I'm a buyer for pre-construction, this is such the opportunities. Like some of the closings, like St. Clair and that, I think they're all around 2027, 2028, right? There's a lot of places like that are long closings. So you buy that today, by the time you get it closed, it'll probably be back up in here. So.
That, and also right now, as you mentioned, Daryl, many of them are offering great incentives, not just to realtors, but to purchasers. One is something called a mortgage top-up. So they either will pay the purchaser on a monthly basis, on average $2,500 to $3,000 a month for the first 12 to 24 months, or for income tax purposes, if the client doesn't want to take that amount on a monthly basis, they will put it all together as a lump sum and deduct it from their purchase price. So potentially, you can again save an extra $60,000 to $80,000 on average on an average size 1 bedroom, which is a big chunk of money, right? And imagine at Yonge and St. Clair or at Bathurst and St. Clair, if you are receiving $2,500 a month and you have rented out the unit 1 bedroom for $3,000 a month, which is going to be a lot more by 2027, 2028, you're going to end up at $5,500 a month. So you're even going to have a surplus. You're going to end up in positive cash flow. And they offer that for 2 full years. So that takes you well into 2030. And that way, that, I'm safe. I don't have to put any extra money out of my own pocket, even if the rates do not change, which we all know that, it will decline and it's not sustainable.
Rates will change, prices will change, everything's going to change.
Yeah.
Nothing stays the same. We all know that. So, if you're a realtor today, and some of them have never done pre-construction, what is their first bet that they should do? Where should they start at? Because I find that a lot of them really just, they want to do it, but they're not willing to pay the price. And I know you always say, come out to the openings, come out to the openings. What else would you advise them that they should be doing?
First and foremost, to find a mentor who knows it very well. Second would be networking. Building and maintaining a strong network is absolutely essential in real estate in general, as you and I both know. But to be able to forge connections with other agents who are in the pre-con sector, with developers, being able to distinguish between each project when it comes to numbers, right? Being financially literate about the whole thing, being customer centric, right? That approach is highly essential because it's a long process. You've got to be able to go through rejections, questions, knowing how to navigate and guide your client from day one until their closing and the services after. Long-term perspective, right? Overall. So find a great mentor, follow that mentor's guidance, go to openings, launches. Doesn't matter if you have a buyer or not related, not relative in any way. You're going there to learn. You will hear the dialogue of these sales and marketing companies, which is going to give you a lot of golden nuggets of how you can represent a project properly. It gives you insight into that submarket, that developer's portfolio. Projections, because they come to you with a lot of information about what's going to happen in that pocket and how much it has grown in the past few years. So this will allow our realtors not to have to invent the wheel from scratch themselves every time, but to build on that information. Right. And then also right now, you and I both know it's business planning season. Right, at RE/MAX Hallmark, and to implement it into their business plan systematically, because so much of prospecting for pre-construction can be done in automated digital ways, right? So I do highly encourage anyone who's in your team currently or thinking of joining.
I'm telling them every single day to take what we have, put it on their social media, and start broadcasting it every day. Not once in a blue moon, every single day. And then build up their database.
I call this secret agent. If you're a secret agent and if you're not consistently sharing these material, your clients, those who know you and those who are not your clients yet, they're going to go to someone else because they don't know that you do this.
Right. So guys, you have the opportunity every single day to go post new construction and VIPs and all lots of specials that for the investors or end users, because I find more end users are coming out more than ever before, because there's so many great projects, so many great opportunities. And you know, I just had a meeting on Tuesday, and basically I said, it's the time for great opportunities to take great opportunities, because a lot of people are not working right now. You know, their year has ended, and you know, they figure the market is a little soft. So instead of going out there and hustling and finding things for their clients or helping them sell their house, they're just sort of backing off. So I figure that anyone that wants to actually work and do it every single day, there's so many different great opportunities. Those that are successful are going to get most successful in a down market and not in an up market. Like I said, everybody can sell them when the market is so hot, but it takes a little bit of skill and it takes a lot of hard work to make things happen right now. So, you know, and that's why I think people are, you know, people with big houses that, you know, they want to downsize. You know, you look at the baby boomers, and lots of them have a lot of money in their home. A lot of it's paid off, even though the market dropped down a bit. What a great time for them to buy pre-construction, because they don't have to do it in 1 year, 2 years, could be 3 years out. So they can be secured, having a place where because most times out of not, if someone's downside, they want to know where they're going to go, and the uncertainty of not knowing where they're going to go. So maybe their kids are over here or some kids there. So this way they can make that decision and plan for that. So it could be a 1, 2, 3, or 4 or 5 year process, and it's just taking them through it. I know that when I work with a lot of seniors, I do a lot for senior homes, that sometimes it takes these seniors 2 or 3 or 4 years, 5 years to make that, they plan to where they want to go, the retirement community, and then they go there. It's no different than investment or another condo that you want to downsize into, right? For location, they might want to walk around by the lake and stuff. I mean, it's quite a bit different if you're walking around Richmond Hill when the sidewalks roll up at 6 o'clock, or if you're downtown, on Yonge Street or King or Queen or something like that. There's always activity going on. So it's a totally different way of life. And, you think of the places that there's so much new infrastructure going in. Like, when condos go into a place, like, it just builds everything up. Restaurants, gas stations, schools, everything. Because you got an influx of new population where you wouldn't have had that before. So, for the municipalities, they get extra tax money. So it's advantageous for them. So it's advantageous for basically everything. What about exit strategy? If things don't go as planned, what would you say is their best things to work on for an exit strategy? Like today, I see more assignments than I've ever seen ever. I think everybody, if you're writing a contract, should have an assignment clause in their contract. You shouldn't buy any new construction without an assignment clause. What's your thoughts on that?
I agree because, Daryl, life happens and we don't know what the future may bring. And as a purchaser, in order to be able to at least protect your deposit and be able to get your deposit back, if not any profit, should something happen in the future, right? The assignment clause will protect you and will give you that right. Now, you and I both know that even when the right of assignment is given, it comes with some conditions, right? Yes. That the developer needs to have sold a certain percentage or maybe the entire building, or it has to be within a specific time period that if it's too close to occupancy or closing, they may not permit it. So very important upon purchasing it. If you don't do it then by the time you need to assign it, it's too late to think of it then. So when you are making a purchase, if you're a consumer or if you're making a purchase, if you as a realtor who's advising your client, please make sure that you have it reviewed by a lawyer, the entire APS, including the clause that is for assigning, and understand what it entails and the conditions and so on. And if it's unfair in any way, or if it's out of, let's say, the norm or standard, then there are ways to communicate that from lawyer to lawyer and possibly negotiate it, right? Because again, we are buying in the future and we don't know what's going to happen. So you need an exit strategy or a lifeline to make sure that you can protect your interest. And usually there is a penalty or a cost to it, anywhere between $5,000 and $10,000. Right, yeah, for some, but lately, Daryl, I've seen as high as $20,000 for low rise.
I've got one for a new house. It's $35,000.
That's the highest I've heard. Wow.
Me too. It is the highest, right?
Yeah.
So this person had a lot of hard times with the builder for the whole duration, right from the get-go. And they're saying they want $35,000. So that's the highest I've heard personally myself. So, but that's why it's so important to speak to your lawyer before you got 10 days of cooling off period. And the assignment clause, I think, is one of the very most important things that you need to put in, because everything is done in favor of the builder developer. You have to realize that if you're a consumer. And even as an agent, it is done in favor of them. So you as the realtor, you need to protect your buyer if that's the case. And make sure they talk to a good condo lawyer that at least they can cap out the rates and get a good assignment that, if they need to take that route, that they can use it versus, okay, you're coming up to closing, we're not going to let you assign it now, right? Because I know it's, like I've got someone now, I got to check on their papers. They sent it to me, and I've been telling them they need to do something. So now their closing's the end of November. So now I got to see if the builder's even going to let them to assign it to try and close it, to resell it to somebody for the end of November, right? So
yeah, and being on the topic of assignments, those who didn't plan well, who didn't buy well, who didn't use an expert, and now are in trouble and cannot close, it's a great opportunity for the rest of us to grab these deals for our clients who are in the investment market. Some of these deals, and we have a specific group for this that, Daryl, you're in it as well, so you can share it with your agents and with your team, great deals that your clients can get into. And one, you're going to make a lot of money, and secondly, you're rescuing another consumer of losing their deposit. So some of these assignments are being sold at price of day one, which, given, again, that real estate is a long-term game and they bought it, let's say, in 2020 or previous due, some of these can be really great deals. So reach out to Daryl if you are looking, or if you have any investors looking. There are many great deals to...
The assignments today are just unheard of. Like, I see people willing to take less than they paid for. They'll lose $50,000 or $100,000 to get out of their sale, because whatever happened in that 2 or 3 years, things have changed, and they've just got to unload it. So there is so much opportunity. Now you got to realize that you're going to have to close maybe in 1 month, 2 months, or 3 months, and you're going to have to take over their whatever was on their contract, and that's it, right? So, again, you have to make sure the lawyer looks at it and you fully understand what it is. But you're not going to have that 2, 3, 4, or 5 year wait. It's going to be 1 or 2 or 3 or 4 months out that you're going to be closing. So some people need a quick closing. So very advantageous time for them right now.
For sure. And also, let's say that you have a client who's looking for a particular size or type of condo that is not currently available and ready to purchase in the resale market. You can take a look at what's going on in the assignment world and maybe consider that. One extra advantage is that if it has not gone through its decor center appointment, your client will also be able to pick and choose the finishes, which is something you don't get with resale.
This is so true. So it has to be at the earlier stages at the assignment when she's talking about that you can go to the decor center. But a lot of the assignments that I'm seeing now are well past that. They're 3, 4 months, 1 month away from closing a lot of these ones. So it's taking it as it is, but you're buying something that was bought maybe 2 or 3 years ago. So even today, you couldn't go buy a condo probably at that price. So there's so much
Even
advantage.
if for some of these guys, it's not that they haven't made any profit, it's that they cannot afford to close it at today's rate because they didn't plan well. Their income doesn't permit it. They cannot qualify for such mortgages, right? So some of them, the price is not necessarily the issue, it's the rate that is stopping them from closing. So besides losing their deposit, they stand to be sued by the developer for damages, which can be a lot of money, right?
Yeah, the developer's not just going to let you just walk away and say, here's the deposit, and say hasta la vista. They can go resell it and do whatever, but they expect to be paid out in full. So people have to realize a contract is a contract. And what's hurting most people is they didn't pay, when they bought it, they were probably thinking of the low interest rates, around 2% or less, or just around there. And now they're at 6 or 7%. So it's a dramatic thing. And that's what Sogol was saying, that, if they could close it, get the funds for the financing from their bank, they could probably close it. But the banks they're not qualified enough, because they don't have a high enough income. They probably already have another property or something like that. So now they don't have enough to cover a second property. So they didn't bank for that possibly. There's so many different things.
Also, Daryl, I think you would agree, as someone who's been in the industry for a very long time, this is not the new normal. This is normal. 5 to 8% interest rate is what's normal. 2% is what was absolutely not normal, yes. Right?
And that's what the market has not got caught up to yet. Right? I started 21%. So a lot of times, even at one point, it was at 10%. So, in the last 7-8 years, people got used to abnormal, where the rates were so low, it was almost like free money. So they were going above their means. So if they could afford, let's say they could afford $1 million, they were buying something for 1.3, right? And it just escalated and everything there. Even
and let's face it, like regardless of the 5 to 8%, which is the true normal, if you look at the history of our market and the country, people still need real estate. That's just, that it is what it is, right? People need real estate. We cannot build enough units to meet the demand for the next 15 years at least. And supply and demand is off balance. Multi-owners are becoming a larger number overall. So the sooner you get into the market, the better off you are, because we are going to become very similar to New York, not that far down in the future, when the majority are going to end up as tenants because it's impossible to get in the market, right, for majority, and you're going to have a small percentage who are going to be multi-owners. So before it gets there, this is normal. It's not the new normal. Let's get in the market.
Well, what about, if you think of rents, where rents were 1 year, 2 years, 3 years, 4 years, 5 years ago, rents have driven up 30 and 40%, right? So interest rates went up, but rents went up dramatically too. So at least with the balance of rent going out for investors, they can get more rent for their place to carry the cost. That's what I see also. Or again, like I said, this one person that we talked to that's running right now, I did a projection of 10 years, and if he kept renting, he'll lose 400, and if he bought, he probably could make 400 profit. So it's a swing of 800,000. So, just got to do a projection for most people, and it's easy to do. Just take what they're paying for rent today, do it over 5 years, 10 years, and where do you think the market will be in 5 or 10 years, right? So
you nailed it, Daryl. And also site viability, depending on how, where our market is, it changes. So it's very important to know where to go to be able to get those rents, right? The 30% increase, you're not going to see that, let's say, necessarily in the north part of our city, but you would in the central core. Where are the rich tenants? Where do they live? Mostly, I would say south of 401, right? So if you're an investor, are you better off spending a little bit more? It's not really spending, investing a little bit more so that you will have better tenants, more qualified, wealthier, and so on, and to be able to get to benefit from that increase in rent, or the other version, right?
Well, yeah, that's why I say location, because you always want to look at what the supply is out there, what's the demand for the rental if you're thinking of renting it, right? You always got to remember there's two different things, end user and investor, right? So you're going to have a lot of investors, and then you're going to have your number of owners. The owners are going to be less than the investors. So you have to look, what's the supply with the rental thing? What jobs are there? Where is the subways running, right? Because most renters a lot of times want to go to the subway and go to work or whatever the case might be. So, you look up in Innisfil and Barrie, they put up the second go lines. And when they did that, houses were just sprouting like crazy, right? So just always go look at where the transportation is going in the future, and that's where you want to go invest watch for the transportation. If you follow the transportation, you're never going to lose. You're going to increase in value dramatically, right?
Daryl, as you and I have discussed in the past, wow, it's 55 minutes. As we discussed, the many things that need to be done as a realtor to make sure that you are guiding your client properly, as many risk factors, benefits, all of this work, you guys, this is a normal amount of work. So what you had in the past 5 years, it was a free ride. You were taking orders. You were not working, right? This is a normal market. This is the normal amount of work that you need to consistently educate your buyer, provide valuable information, golden nuggets, guide them so they can make more informed decisions, and take them through every single step. So conversations we have sometimes, Daryl and I, and with, some of our agents, and they're like, I had 5 different projects showing it to this one person, and then, it took us a month to narrow it down. That's normal. What we had last year or the year before, that's what was not normal. And we got to get used to this.
So you have some time for a few questions?
Absolutely.
So who in the room has a question they would like to ask right now? If not, I'm going to go on to the people out in the Zoom world.
Hi, Sogol.
Daryl.
Hi.
Hey, it's
Hi,
Tara.
Tara. Hi, honey.
So I heard some of these developers are putting some clauses in the contract that if they want to assign, only their own agents are able to do the assignment. And if they want to rent, only their own agents are able to do it. Or if they want to sell, they can only use their own agents.
Yes, so that is a thing. Mainly, they would like to keep control over pricing. That's the main objection here. When they have their own agents, it allows them that control. So imagine if you buy a unit for me, and then I need to sell and assign it before closing. Imagine if I'm super desperate and I just need to get rid of this as soon as possible. What is going to make that happen? A very attractive price, right? But the price that I sell it at, it's going to affect the building because it's going to build a history, right? Therefore, one of the ways that they can protect the integrity and value of the building is to say, you know what, we're not going to allow an assignment or a sale unless it is through our own, and then they have select a group of agents or possibly a small brokerage on their side in order to do that. So like Daryl said, we went over this more than once, highly important to have the agreement of purchase and sale, all amendments, addendums reviewed by a lawyer who knows pre-construction sales well, so that there's no surprise when comes an emergency situation.
Like that situation right there. That's a great question.
But one more question. Assignment sales, the price is not recorded on the MLS, right?
Sometimes it is. So it depends on the developer. Some do allow it to be listed. Those who actually ask for their own agents to do the sales, they're the ones actually who mostly allow it to go on MLS. So it's not 100% that you have to sell it off market.
Oh, Oasis got a question. This is good. Can you recommend any projects under $800 a square foot? Well, I know a lot of people are going out to Calgary and out to Edmonton and stuff like that right now.
They are. I mean, I don't know much about Calgary's current state of market. I know for the past decade, unfortunately, there hasn't been that much profit, but prices are incredibly lower than Toronto. They don't have land transfer tax. Their closing costs are just so much cheaper than Toronto. So if that's the only way to get in the market, you can take a look at it. But right now we have a couple of fantastic deals in Hamilton, you guys. So for under 800 PSF, not necessarily, but if you're looking to spend maybe about, let's say as a purchase price, if you're looking to spend about 550,000 and get guaranteed rental income that covers your mortgage at least for the first 2 years, it's going to take you well into 2029. Take a look at a project called 1107 Main. It's by a reputable developer. Portfolio is very strong. It's the only building that has been launched, the only condo. It's a 7-minute walk to McMaster, one of our best universities in Canada, and they give you rental guarantee for 24, either 12 or 24 months, and they manage it for you for free. Also, there is a mortgage top-up, or you can bundle it up and deduct it from the price. And all you need is $25,000 this year, another $25,000 next year, and a third one in 2025, and nothing until 2027, which comes your closing time. So 5% of the purchase price. Incredible project. Check it out. If you need more information, reach out to Daryl or myself, and we'll be happy to give you the assets.
A lot of the builders are offering such great incentives for like renting them out for 1 year or 2 years. Mm-hmm. You know, even up north, up in Muskoka, you know, Frida's got stuff going on there. Like, so it depends what your appetite is. Again, whether you're end user or, you know, you want it for a recreational place. There's so many different aspects. It's not one shoe fits all, guys. You have to understand. It's just like, you know, we'll live here, but someone else may not live there. So you have to find out what's important to whoever you're dealing with, be it the end user, the investor. Is it going to be a recreation property? You know, so many different things. And like right now, I've never seen so many great incentives, really great builders. Like some of the things they're offering right now that, you know, other people bought, they can go in and get more incentives than some that already bought already. So
yeah, but you said it beautifully. You know, regardless of incentives and all of that, the first thing is to get to know the person in front of you, right? Why are they looking to buy? Is it an end user, investor? Then when we say investment, that's a vague word. If I ask each person in this chat to write a description of what investment means to them, we're going to get many different descriptions of that, right? So get to know your client, understand what their needs and wants are, and then you can narrow it down to the many great options that exist on the market today.
You know, if you look at people that are living, let's say just in the GTA, with Mississauga, Richmond Hill, Oshawa, whatever, Vaughan, maybe the family's got 2 kids, right? And their kids are planning to maybe go to university downtown, to U of T or something like that. Well, you know, lots of kids want to go live on campus or whatever the case might be. Like in London, we used to sell a lot of investment properties out there because lots of people went to London, same as Ottawa. So, you know, when your kids are going to go, so why not have the parents go buy something, have their child live in it, and then rent it out to some of the other people, and it pays for their whole time that they're there. And they could possibly make a profit, or even if they didn't make a profit, their child stayed there for 3 to 5 years rent-free, right? So many great opportunities. You just have to look what your clients need. So if you see someone that has a couple kids, I remember some of my friends, they were selling for the kids' university, you know, so the kids were, you know, very young, and they had started investing for their schooling, because schooling is very expensive. So, you know, it's no different than that. Find them a place to live when they're going to go to university or something like that. Or maybe they're going to go get a career. They're a young person, they want to go get a career downtown. They don't want to live, like, if I was in my 20s today, I wouldn't want to live in Richmond Hill. I'd want to be downtown where all the action is. So I'd try and find a job down there and work down there. So, the parents can help out in a lot of these situations. Or even, if you're a young person, if you're living at your parents' place, maybe you buy a place, stay live with your parents for another 2 or 3 years till your income comes up, and then you can go afford to go live in your own downtown, right? Everybody has a different taste. You like vanilla? Do you like chocolate? You like strawberry, right? Whatever, pistachio. Everybody has a different taste. And it's up to us to find out how they can invest and profit from this. Because you got to realize, there's always, at the end, if they hold it long enough, there will be a profit, right? It's like owning a home. You own a house for 30 years, right? Your profit margin is up substantially. So it's long-term versus short-term, number one. That's the number one thing. Long-term versus short, because if they're going in short-term, they could get their socks kicked off, right? It just is. But if you go in long-term, it's not too likely. I would take real estate over any other investment over a 10-year period, myself personally. And that's my belief, and that's what I've always invested in. I know it, I breathe it, I sleep it, and I'm happy with the decisions I've made in real estate. So, you just have to find out where your clients are at, because it's a great opportunity for you and for them. So you just have to open up.
There's no instant gratification in purchasing real estate. Definitely a long-term game. There is another question here. It says, how much is the minimum deposit required for an assignment? That's a great question. So the minimum, it would be like a resale, 5% of the purchase price. However, there are many different ways of drafting an assignment. So depending on the assignor, the person who's trying to sell the assignment, and what they need. Let's say I need my entire deposit that I've paid to the developer. I need that back. So that's 20% of the purchase price.
I find on assignments, they want the deposit money.
But Daryl, this is the thing. Imagine that if you ask for 5% versus 20%, that just makes your pool of buyers much smaller, right? So depending on where this assignment is and how hot it is, you may want to pick and choose wisely the strategy of how much deposit you're asking for, right? If you're asking for the full 20%, that's a big chunk of money that they could potentially just go into a project that just recently opened and get all the great incentives we talked about, as well as a better price, right? Because as you guys may know, many of the incentives or all of it that are offered to the purchaser, they cannot be assigned. Those incentives cannot be assigned when you're assigning. So that's another thing to keep in mind when you're making an assignment.
So let me just get that clear. So the incentive, let's say, so they just bought one of these hot projects right now and they've got assignment in there, and I want to resell it on assignment. They cannot sell it with the incentives they got when they bought it?
Correct. Over 90%, I would say even 95%, it clearly states in the agreement that any incentives offered on day one or the day that they purchase is non-transferable. I'll give you a very sad story. So this is about a year ago. One of our agents from Bayview office actually called and said, I need your connections. I need your network. I need to ask for a favor. I said, what happened? So they purchased an assignment, low-rise. It's a detached home. Day one, when the first purchaser purchased the property, the incentives were that they were going to provide appliances. Because with low-rise, usually appliances are not included. But in this case, they had said, yes, we're going to give you a fridge and a stove and all that. When the assignment was done, the agent and the assignee, neither of them really checked to see if these were incentives and if they were transferable. Comes closing time, the purchaser, who is a single mom and a teacher, goes to the property and there are no appliances. So she calls and says, I think the builder forgot. They go to the builder. No, we didn't forget. It was incentives, and now those are not transferable to you. So jumping through hoops and everything, we asked for a favor, and they were able to get the incentives because, we have such a big volume in terms of sales, and we support their projects continuously, but it's not going to be such happy ending every time, right? So make sure that you understand what the APS says, what are the incentives, and if those incentives are transferable to the new purchaser.
Well, I'll tell you what, most people probably did not know that because once they did the contract, they got the incentives that, as far as I'm concerned, it should have been put in the contract. But as I remember what I told you, the builder and developer work for them. They don't work for you and me. Correct. So that's why you have to make sure that it's so transparent that whatever you guys write up in a contract, so knowing that, when I wrote up my contract, even to the builder, I say whatever incentives are being offered, even if I had to do an assignment, they would be carried through with the assigner, right? So that means the buyer of my project would get that benefits, right? So that's only you and the lawyer and the builder that can do that at the time of agreement of purchase and sale. No time after will you be able to do that. Or the builder, like I say, will charge you a large amount of money, right? If you have to fulfill that. Is that correct?
Correct. Yes.
Right? So that's why, guys, and that's why I tell people with getting into commercial real estate, if you don't know it, don't do it. So learn the game, learn what you can do and what you can't do, and do it properly. That way you protect your clients, number one. And then you're protecting yourself and your brokerage after that. Because it's so crucial that you imagine if that lady's pulling in there and Sogol didn't have the connections that she did to help her out, then there's probably $30,000 worth of appliances that are not there. She doesn't have the money. So who do you think is going to get sued for those appliances, right? Most likely the real estate agent and the brokerage. So,
You're absolutely right. Exactly like commercial, Daryl. If you guys are new to real estate or to pre-construction sales, please pair up with an expert. Share your deal for the first few rounds until you become an expert, because like Daryl said, putting your buyer at jeopardy, your own reputation, which is everything, right? And with social media today, it's easy to lose your reputation by making one simple mistake.
We already just seen that with one of the agents at Remax Realtron. He's no longer there, right? He made a joke of something that wasn't too funny, and 80,000 TikTok things, and people ready to go down crazy.
The power of society, right?
That's
for
right.
sure. Yeah. Absolutely. So make sure you protect yourselves. Reach out to those who know if you don't. And Daryl and I are here to assist.
Any last questions, parting ways for Sogol? Who's got a question? Stand up, Nick. Come on up here. We got one more question here. Nick's got one.
Sure.
Hi, Sogol. How are you?
Hi, Nick. Good. How are you?
I'm good. Thank you.
Yeah, Nick.
Thank you for the valuable advice. One of the main things that you mentioned is that if you're not an expert, hook up, get a mentor, because we realize that pre-con is not as easy as just taking your client by the hand and signing your name on a sheet and making your 2.5, 3.5, 4.5, whatever it is. So thank you for that. You just, I guess, intensified the fact that we do need some help, those of us that are not into the pre-construction. So I'm pretty good with numbers, working out numbers. However, do you have some kind of spreadsheet or flow chart or point form questionnaire that at least some of us can familiarize ourselves before, of course, approaching somebody that has, a lot more experience? Is there something on in
So that's a great question, Nick. We don't have anything on the hub However, I do have a workshop on a monthly basis. This is 10 months out of the 12 in a year. We skip December and August, but every month, second Tuesday of the month, it's an in-person only workshop. It's about an hour and a half, and it's held at the training, in the training room at our head office. So if you take a look at our training and events calendar for Hallmark, you will see that. You're all welcome to join it as every month or once or however many times you like. And I go over all of these as well as most up-to-date handouts. I go through the process from A to Z. Golden nuggets here or there about things that are not openly mentioned out there. And the great thing is that we have, many attended, and each person, by asking questions, it may be questions that you might have not thought of, but you needed the answer to. Right? So
Awesome.
The next one, last one coming up for this year is November 14th, and it's at 1 p.m.
Perfect. Thank you so much for all the valuable.
Okay, you're so welcome. Thank you for your question.
So, guys, I want to thank Sogol. I mean, she wasn't feeling too well, and that's why she couldn't be here live with us today. But she so graciously showed up anyway and gave us her precious time and her knowledge is like unbelievable. So, Sogol, as always, I want to thank you. I wish I could give you a big hug right here, but we're going to catch up after when you're feeling a little better.
Absolutely.
Everybody, we give her a big hand here.
You're very sweet. Thank you so much for having me. And I'm always a call away, you guys, and I hope to see you very soon. Thank you for being here today.
So this is Daryl King with Sogol Monfared, sharing the mindsets here on Halloween. Where's my mask? I should end with my mask here. It is Halloween, so I want everybody to go out and have a little bit of fun, trick or treat. So if you were here, we'd give you some treats. We have some treats. So everybody, happy Halloween. Let's go have some safe trick or treating tonight. And go help some happy clients. They need to buy or sell or invest. Let's go. Hasta la vista.